Governor Reddy, would you enlighten us about how we should view the economic and financial system in your country?
Oh,
I think you made
is this okay? I hope.
Yeah. Probably if you just put it on the lectern, it'll work.
It should come here, I suppose.
I bet if you just put it on, I bet if
Yeah.
you just put it on, I bet it'll work. Okay. Otherwise, it's good.
Is it okay? Am I audible? No?
No?
I think you are now.
Yeah, you are.
Let me try here. Is this okay now? Thank you. I must compliment INET for organizing this historic event, and in particular, I am grateful to Rob Johnson for giving me the opportunity to be here today. I will speak on, I make some observations on evolving economic and financial systems in India. I'll be almost telegraphic. I think as far as the economic system in India is concerned, the unique factor is the changing mix of public and private and market and regulation. For a while, we had a healthy mix, and then unidirectional public sector expanded. More recently, private sector expands, public-private participation, but still public sector dominates in important sectors like banking, insurance, energy. And so this is one aspect which is often ignored. Second, in terms of the structure of the GDP, I think for a developing country, the unique feature is that manufacturing accounts only for about 15 to 20%, and that is something which is disturbing. And the major problem in terms of the structure of the economy or the functioning is the deficits in infrastructure, both the physical infrastructure, which is very evident, and social infrastructure in terms of education and health. Having said that, India has fairly strong household savings. Actually, the household savings in India are on par with the rest of the Asian countries. It is actually the government's deficit which pulls down the aggregate savings rate, and still it is fairly high, over 30%. The current account deficit is manageable, sustainable, 1% in the last few years, more recently 3%. And therefore, overall, and the financial sector hasn't got into problems. By and large, one can say there are no serious imbalances. The financial sector is not in serious trouble. Growth has been respectable. There has been some pressure on inflation and some pressure on CAD. So there is not much to talk about the Indian economic system at the current stage, I suppose. But there is one area on which I think a lot of comment has been made, that is about the subsidies and the fiscal deficit. I agree that the fiscal deficit is a problem. And I agree that subsidies can be distortionary. Subsidies can be inefficiently administered. But overall, we have to recognize that we are talking of a country where agriculture accounts for 15% of GDP, 50% of the people are dependent, it's growing at about 3%, which means per capita GDP in agriculture for that part of the population is growing barely at 1%, whereas for the rest of the 1 or 1.5%, for the rest of the population it is growing at 8%. Per capita GDP is growing at 8 to 9%. So in a way, much of the subsidies is an investment in stability to carry on with the reform process. I think that's big picture. I'm not defending subsidies at any cost, but things like rural employment guarantee scheme should be viewed in that perspective. Now coming to the financial system, you may be interested to know that in 1935, the Reserve Bank of India Act was passed. And the preamble says, in view of the huge uncertainties in the global economic situation, a temporary legislation is being passed. We are living both with the temporary legislation today and with the global uncertainties. But in any case, from then on, the Reserve Bank of India continued, the same legislation continued with some changes, essentially which it meant that the central bank continued to be very central as it was a number of years before. So in a way, this enabled a lot of coordination. And as you know, much of the problem recently in the financial sector was lack of coordination among the various regulators and various functioning. So, but in order to incorporate the required changes of semi-autonomous functioning, RBI created internal mechanisms like Board for Financial Supervision, which is semi-independent, a semi-independent board for payment systems. So, it was the internal mechanisms which have been developed both for coordination among the other regulators, among the RBI and other regulators, as well as internal functioning. So, my point is that everything does not require a legal amendment. Very often the legal framework is good enough if one is willing to work on it. The financial system, yes, it is bank dominated. It continues to be bank dominated. Public sector dominates, but the difference is earlier public sector was 100% government owned, whereas now it is 51%, and its shares, the public sector bank shares are traded, and therefore, there is an element of market discipline. They have become quite competitive, and they have become quite resilient and healthy. There is a large presence of private sector banks already. The foreign banks are present, and so in a way we have a situation that is bank dominated, but still public sector bank dominated, but by and large working on the basis of market logic. But more important, very often people advocate that there should be further liberalization. The basic issue is that we had a very serious financial repression. It is not as though it has ended. Even now, there is financial repression in India. This is because of two reasons. One, government debt is high, fiscal deficit is high. So, when the government debt and fiscal deficit is high, if you try to liberalize, there could be instability. In fact, the Economist in 2007 November identified India as one of the 3 most vulnerable economies in the world because of the public debt. So, once public debt is given, and that is a sovereign prerogative, then the financial sector has to be managed with a precautionary motive and still try to maximize growth, and that is what has been done. So, it had to be managed, the financial sector had to be managed to subserve the interests of the fiscal, you may call it profligacy, but whatever it is. And I believe that for quite some time, given the fiscal situation, and if you want to keep inflation under control, I am afraid that some element of financial repression will have to continue till the fisc comes under control. Here I differed with some of my friends, perhaps including many of the international analysts. They felt that if you liberalize, there will be enough pressure on the fisc. We have seen whether there is pressure on the fisc in many countries, and certainly not for a country like India, and that is a risk I believe we should not take. Second, Delara had mentioned about the importance of developing financial markets. Interestingly, the retail depositors do not have much faith in the financial markets yet. Mutual funds are really rather much of the financial activity is undertaken by the bank money, either directly or indirectly. So, I think one has to do something more to inspire the confidence of the retail depositors. Now, as far as the reforms are concerned, I agree that in fact, this point was raised by Larry Summers. Interestingly, he compared that deregulation is important. Otherwise, you have to go to India of 1991 when the banking sector was poor, but that is not necessarily so. The banking sector has moved very much to 2006. In other words, there was significant deregulation, but there was not too much of deregulation. So, perhaps India has to do a little more deregulation, just as the United States have to do a little more re-regulation. I think that is how we have to view the problem, and not from a choice of either you go back to 1991 or you be with me. So, I think that is there's another issue that was raised by Gordon Brown, and that is on the opening up of the markets. And as I mentioned, the issue is fiscal vulnerability, and do we expect the fisc to be responsible enough? And if it is not, and you know, most important, that that the governments are not very sensitive to interest rate once they approve the budget. We have to take that into account. And in any case, as far as the development of equity markets are concerned, it is essentially dominated by FIIs and the domestic mutual funds, which the mutual funds themselves in India get about 70% of their amounts from non-banking financial companies and insurance and mutual funds, all are with interconnected corporates. So if I have to say, and there is NBFCs are essentially shadow banking. So if I have to say the strength of India's financial sector is in banking, the weakness may be in the non-banking part of the financial sector. On capital account liberalization, I agree with Professor Stiglitz that IMF is sort of a reluctant concession. The basic problem is that in aggregate, good, if the capital comes, fine. The problem is volatility, it's not the amount of the capital. On a net basis, we can absorb 2%, 3% if I'm assured of 5%, 5%. We know in history there was 10% current account deficit financed, but it's the volatility that is the problem. So let me conclude. What do we expect from India? We expect continuation of a very strong consensus for a very gradual reform through constant rebalancing. We are a society which is very diverse. We have to manage the diversity. We have a long history of knowing sufferings, so we are risk averse. In that way, we will be contributing to global stability. Surely, India will contribute to global stability and still continue to grow. Thank you very much.
Thank you for staying well under the 15-minute limit.